Welcome to CRE Fast 5 and today's overview of the fitness industry. I'm Carly Iacono. It has been a wild ride for the fitness category these last 3 years. We saw bankruptcy and restructuring aplenty during the pandemic, and then a huge resurgence in visits, which in many cases has already surpassed pre-COVID numbers. Today, we're going to take a look at this interesting retail segment by the numbers and then touch on some of the top tenants. Let's go. In the United States, it's estimated that 39% of the population holds a gym membership. Even more impressive is that a good number of those people are actually using them. Visits to gyms and health clubs in January 2023 were up 30.3% year over year, according to placer.ai. An impressive start to the year, even if the bump was in part due to lingering COVID effects at the beginning of 2022. Visits year over 3 year for the end of January 2023 were still up over 8%, meaning foot traffic is exceeding pre-pandemic levels. Many chains are adding new locations or rebranding existing to other concepts, and the growth seems to be focused around the value segment. Crunch Fitness and Planet Fitness added 100 and 158 new locations respectively in 2022, and LA Fitness is focusing on expanding its value flag, eSporta Fitness. Now let's run through some of the key points on the prominent companies in this space, starting with Planet Fitness. Planet Fitness is publicly traded on the New York Stock Exchange under the ticker PLNT. The company has been in business for over 30 years and is headquartered in Hampton, New Hampshire. Planet Fitness boasts more than 2,400 locations and 18.1 million members as of March 31st, 2023. Q1 saw the opening of 36 new locations and an uptick in sales of 19%. The next big player in the space is Fitness International, which is the parent company of LA Fitness, eSporta, and City Sports Clubs. This private company has been in business since 1984 and is headquartered in La Miranda, California. The three brands that make up over 780 locations across 27 states. From a real estate investing standpoint, it's important to note that this is the largest non-franchised club operator, and you will find corporate guarantees on all of their eSporta and LA Fitness leases. LA Fitness did some strategic right-sizing the last few years and has been rewarded with a notable uptick in visits per venue of 14%. For the trailing 12 months ending March 31st, 2022, sales were about $1.89 billion. Now let's move on to one of the leaders in the luxury gym space, Lifetime Fitness. Lifetime Group Holdings, Inc. finished out fiscal year 2022 strong with a jump in sales of 38% to $1.82 billion, driven by a 33% unit comp growth, according to Credit Intel. The company opened 10 new centers, which translated to a boost in total membership of 11.7%. They have another 18 to 20 new centers planned for the next 2 years in targeted affluent areas. Interestingly, the company is using sale-leasebacks to support debt reduction and free up cash flow for growth. I wouldn't be surprised if we see more sale-leasebacks in the next 12 months as retailers look to pay down debt obligations. All in all, the fitness industry has bounced back nicely from the COVID era shakeup. The leaders in the space who are executing mindful growth strategies continue to strengthen. From the investor standpoint, net lease gyms often offer attractive cap rate spreads over other investments, and many have long-term leases with corporate guarantees. The underlying real estate usually has good access and a high parking ratio, offering solid long-term value. If you would like to learn more about investing in net lease gyms, please give our team a call. That was CRE Fast 5. I'm Carly Iacono, and I'll see you soon.